What's going on, guys? In this video, I'm going to show you how to get paid every single month from dividend stocks. That's a big goal of a lot of investors. They want to become dividend investors or dividend growth investors so they can live off their dividends in the future. That's the end game, at least for me. But what people will do is they'll invest in a company that they know pays dividends. So, for example, Target. You could see right here, you're getting paid 2.29% on $173 for a share. So you're making $3.96 over the course of a year. No one's retiring off of that, but as you continue to invest and buy more and more shares of different stocks, eventually it adds up. But a lot of people don't understand exactly how dividends work. So again, we'll just use Target as an example real quick, and then we'll dive into how to get paid monthly from dividend stocks. But one of the huge things is right here, your payout frequency. So unless you're really good with managing your money and okay with only getting paid 4 times a year, this needs to be key, your payout frequency. So you could see a stock like Target and most other dividend paying stocks, including dividend ETFs, will only have a quarterly payout. There are some exceptions that pay monthly and then others that only pay annually. But you could see right here for 2022, because that was the most recent year, Target paid out its dividends March 10th, June 10th, September 10th, and December 10th. So once a quarter, 90 cents, 90 cents, and then they upped it. So you're getting $1.08 and then $1.08. And that was your full year of 2022. You could see as you scroll down throughout the quarters, Target has slowly increased their dividends throughout time. You could see that they actually have a dividend growth of 25%. That's pretty aggressive. It probably won't stay that high for too long. And that's when you have to look at the payout ratio. You don't want something with too high of a payout ratio. 65 is fine. There's still room for growth, but it's not like they're stretching their profit thin. But that's for a different video. We're focusing on your payout frequency and your annual dividend. So again, that's Target. There are different companies that you could look at as well. How about JPM? You could see its annual dividend is different. Its payout is the same, but look at this, different months. We got March, June, August, and October. And then if we jump over to something like, how about the SPYD, or everyone likes SCHD, that's the Charles Schwab Dividend ETF. It's performed really well over the past couple of years. You can see it has a nice dividend yield of 3.33%. It is quarterly. Payout ratio is nice. Its annual dividend is pretty nice because it's 3.3%. And then its growth is at a nice healthy amount, 13%. But again, you could see we run into the same problem with it just being quarterly. You got March, June, September, and December. So what do we do to get paid monthly? How do we do that? And what's a good dividend investing strategy? This is not financial advice. This is for entertainment purposes only. But right off the bat, one of the easiest things to do is if you find an ETF or a stock that pays monthly. So, for example, the Dow Jones Industrial ETF actually pays monthly. So you could see you got 2% dividend yield. So not super high, but you could see March, February, January, December, they actually pay out right here monthly. So you could see the most recent payment, which was March 13th, or that hasn't come up yet, but its payment is going to be 55 cents. And it kind of varies. Sometimes it's a little lower, like the last payment was 28 cents. The payment before that was 75 cents. So it's kind of all over the place, but that's not too bad. The reason why is because you need to see what its holdings are. So it only has 30 holdings, which you can see right here, and they're all dividend paying stocks. But maybe one month 3M will be paying more than maybe Apple the next month. And that's why there's variance there. So it's a good option, but a lot of people like to pick their own individual stocks. So what you want to do, and we're actually going to jump over here. Here's an example of 12 different stocks. And I'll explain the color coding in a second, but some of you may already know where I'm going with this. But all 12 of these stocks, we'll say we have a hypothetical $160,000 to play with. We have 100 shares in each stock. Here's their value going down here, and here's their annual payout. So, for example, if we look at about Cisco, your annual payout is $1.52 per share. We have 100 shares. So we're making $152 from this. And then you could see, depending on what stock we have, where its dividend is, and what its value is, we have some nice variety. There's some that are higher than others. But if we look all the way over here, all of them are quarterly payouts. Here is the months that they pay out. And if we filter this, I color coded it to make it easy. So these 4 stocks pay out in February, May, August, and November. Then the next 4 pay out in January, April, July, and October. And then the last 4 pay out March, June, September, and December. So we covered all of our bases. Those are all 12 months right there. And you can see each quarter, or well, each month will have a different group of stocks that will be paying us, because you don't want to necessarily rely just on one stock, because a stock doesn't have to pay its dividends. It could cut its dividends, and that has happened in the past. For example, Boeing. So if we look at Boeing, if we go to dividends, it hasn't paid dividends. Its last dividend was before the coronavirus, March 6th, 2020. So over 3 years now was its last dividend payment. And it was a pretty solid dividend paying stock. You were getting, at least the last time it paid dividends, the last couple of quarters that it was paying, you were getting over $2. That's a nice chunk of change. I forgot exactly what the yield was, because that's really what matters, but it was a decent dividend paying stock, and people knew the company for its strong dividends. And it doesn't matter that it was paying for the past 7 years. Anything could happen where a dividend paying stock could just stop paying dividends. They don't need to pay you those dividends. The only time they need to is when they declare, hey, we're going to make a payment. But after that declaration date, they could say, you know what? There's not going to be another declaration date. We're not going to pay dividends. So that's why you want to diversify, maybe something like this, where you have a decent amount of stocks in each month that you'll be getting paid. But if we break this down, if you just had one share of each stock, you're looking at $50.32. But because we have 100 shares of each stock right here, we'll be making $5,000 a year, a little more than $5,000 a year from these stocks. So what is that going to look like? I do have some tabs. I made some tabs. So this is what, if you just had one share of each stock, you could see how each month is different. I did color code it to what I have right here. So you could see the stocks in the red are going to be our bigger months. We're going to be making $6.50 from those groups. And then you have some that are smaller, like the blue stocks are going to be $2.50. And then the green are going to be $3.59. So what does it look like with $160,000? This is what your $160,000 portfolio is going to look like. On the green stocks, each quarter we'll be making $359. The blue stocks will be making $250. And then the red stocks, that's going to be our big quarters, $650. So we can mess around with this, so then it'll match better with it being consistent. Maybe we want to aim to make at least $400 each quarter. Maybe we know, okay, we got to pay some property taxes. So maybe the months leading up to when we're going to be paying property taxes, we want that to be a nice big dividend payment to help us pay. There's a lot of different strategies that you could go about with this, but I think it's a real good starting point, knowing what you're looking at when it comes to your payout frequency and when you're being paid out. Because we know, hey, March, June, September, and December, we're making a big payout. We're getting a big payout, but then for November, August, May, and February, not so big. Maybe we put more money into these 4 stocks to help boost that payout, so then we could get more during those months. Maybe that's fine. Maybe you could get by with those months, or you're not looking to tap into your money yet, so it really doesn't matter. But this is definitely something that you want to consider in the future to live off of your dividends. You got to think realistically. Obviously, it would be kind of hard to only live off of $5,000, but this is only a $160,000 portfolio. What if it was a $1.6 million portfolio after investing for 30 years? Now you're making $50,000 a year in dividends. You got to time this all out. It's really good to lay it out on a map like this so you know, okay, can I get by with X amount each month? But guys, that's all I have for you right now. Just want to point that out. I think it's useful for anyone to know if they want to get into dividend investing, at least to think for the future term. If you like this video, make sure to smash that like button. And guys, as always, I will see you in the next one.